I am joined for more information and for his first take on today's figures. I'm joined by Vivek Kumar from QuantEco Research. Vivek, thank you so much for taking time out for us.
Hi, Pallavi. Thank you for having me on the show.
Always a pleasure. So what's your quick take? What are your first thoughts looking at the figure? Not entirely on unexpected lines, but an extremely pleasant and a welcome change, nevertheless.
Yes, I guess it's pretty much aligned to what the markets were expecting, although it's slightly above our own expectations. We were close to 3.3%. The actual number is almost 3.5%. So it's marginally higher, but I would say yes, you are absolutely correct. It's in line with what the market was expecting. So few things here. The number was expected to be extremely low because of the extreme amount of favorable statistical base which was at play in the month of July. That's because of the huge run up in tomato prices that we saw in the month of July of 2023. So there was not that you don't have that run up this year, it's just that last year in comparison was extremely huge. So you have that statistical base in your favor, and that helped to bring down the overall headline inflation. In fact, if you see that statistical base is uh, very good in terms of food inflation. In fact, the food inflation last month was 8.4% in annualized terms. This time around, the food inflation is 5.1%. So you can imagine the drag which is there. Food inflation is dragging down the entire headline inflation lower because of its sheer. So that's one. The second aspect is on a sequential basis. When we say sequential, we compare the index in the current month with the previous month. On a sequential basis, the miscellaneous basket has gone up by almost nearly about 0.8 percentage points vis-a-vis last month. So that's a significant increase. We were suspecting it to happen. This is your telecom price increases getting captured in the data. We were suspecting it to happen. Is the difference between what we were expecting and what the data has thrown at us is earlier we were anticipating it to be probably phased out over a span of 2 to 3 months. It looks like we still have to ascertain it with granular data. It looks like the entire impact has come on board in the month of July itself. So that explains the huge, nearly about 0.8 percentage points jump in miscellaneous inflation. So what it will do, Pallavi, is that it is going to increase your core inflation. So I am yet to ascertain what the core inflation number for July is. But looking at the miscellaneous index sequential change, the prima facie feeling that I have is core inflation should ideally move up by 20 basis points, somewhere close to 3.4, 3.5%, vis-a-vis 3.2, 3.3% last month.
Right,
So these
okay.
are the two to three broad takeaways.
Right, and that was an interesting point to bring up, the rise that we have seen in miscellaneous. But I do want to quickly go back to understanding a little bit more about how some of these trends in vegetable prices and the broader food category is playing out. We have seen, like you said, a substantial dip in the food inflation figure as well as in vegetable inflation. You spoke about how we were seeing considerably higher tomato prices. Prices for potatoes and onions, though, continue to remain elevated this time round as well. On a sequential basis, we continue to see positive momentum in food prices, essentially indicating that that's something we're still monitoring going forward, and prices of key vegetables continue to remain elevated. What's the latest on that? Are we seeing a little bit of a dip going forward there?
Yes, I suspect what you say is true, which is getting reflected in data. The momentum, when we say momentum, we look at how sequentially things are changing. So sequentially, it doesn't look like between June and July there has been a lot of relief. The June food price momentum was almost 2.7% month over month. So month over month, food price basket went up by 2.7. This time around, it's 2.5% month over month. So that's the sequential change. So it's not much of a relief. 2.7 has come down to 2.5%. So things have not really buzzed vis-a-vis where it was in terms of June and July. Now, in terms of what the on the ground situation is for the month of August, it looks like there could be some relief because tomato prices are down by almost more than 20% on an average basis in the month of August so far. So we have data for about 10 or 11 days. That is what the indication suggests. We see indication of early signs of reversal in onion prices. That's what the first 10, 11 months of data suggests. Potato prices, on the other hand, while they have not declined, they are showing signs of plateauing out. So it's becoming a flat line for potato prices. So which means when you're going to compare prices in August vis-a-vis July, the trend will persist. Potato probably would be just about a marginal increase. Tomato is where you're going to see a sharp correction. And onion will probably see a minor correction. So that's what the early trend suggests. Now, whether these trends will hold for the remaining part of the month or whether they'll accelerate, because there is an expectation that monsoon situation will probably improve further. In fact, it has already improved. Rainfall has already improved. Going forward, the La Nina conditions are likely to set in. So hopefully September is also going to be much better. So if all this thing, if we put together, there is hope that the positive in terms of the prices coming off, especially for some of the perishables, some of this price correction trend were to hold and in fact were to accelerate further, then the relief that we're talking about uh, could in fact gain momentum, more so in September and maybe a little bit in August.
Okay, all right. So that's the food basket. We have spoken, of course, about some of the components of miscellaneous. We're also expecting some impact of the telecom tariff hikes to reflect, or is that already factored in? And also, while you said that we're still looking at the core inflation figure, it does appear that the tide is turning, again, not entirely on unexpected lines.
Yes, correct. So looking at the miscellaneous momentum, it looks like the prices have got incorporated. We will wait, as I said, we will have to wait for granular information that will be available, I think, in due course of time, maybe in the next 30 minutes or so. We'll be able to ascertain that. But yes, overall, what it is doing is that it is reflecting in a higher core inflation. So that deceleration that we were getting used to, month over month, the core inflation numbers were coming lower and lower. In fact, almost every month, if you would recall, we were seeing record low core inflation. So that deceleration in terms of core momentum is now going to cease, and in fact, now you probably would have seen a reversal. As I said, my hunch is that core inflation probably has moved up by 20 basis points or so. And going forward, also, this could result in slightly higher core inflation going forward. Now, this is not entirely unexpected. And as I think you also pointed it out, the RBI governor has pointed it out. In fact, it's also there in the NTC commentary that the core inflation is likely to move up. There are signs of bottoming out. And our uh, projections as of now suggest that maybe by the end of the financial year, core inflation could be somewhere close to 4% levels.
Okay, and one quick question before we have to wrap up on core inflation again. Like you said, it is expected to be closer to 4% by the end of the year. How much of a concern should that be, especially given that core inflation has been a tremendous source of comfort and has helped bring down the headline inflation figure considerably, given that we have seen persistently high food inflation thus far?
So, if I have to zoom out from the current context of where the entire debate on growth and inflation is, and where the entire debate on the expectation with respect to monetary policy is, then a 4% core inflation is a very healthy situation to be in, because we have a target of 4% headline. And what would be an ideal combination of this headline? An ideal combination of headlines would be when food inflation is close to 4, my fuel inflation is close to 4, and my core inflation is also close to 4. This would be the most ideal situation to be in. Core inflation remaining at 3% or fairly, or in fact even more than 3%, is is not good from a very long term perspective, because it will somewhere start suggesting that pricing power is getting eroded in the market. That's not a good sign from a longer term perspective. Yes, there can be other factors which have brought down core inflation in the current context, but it's just from an economic rational point of view. The argument is that a very subdued level of core inflation ideally will not be a good indicator of the economic activity. The 4% core inflation coming off from record low levels, I would see it as a sign of normalization rather than as a sign of concern.
All right. Thank you so much, Vivek, for taking time out for us. This was most informative.
Thanks so much.
Thank you so much for watching NDTV Profit. Stay tuned for more coming up.